All right, guys, we are live. It is September 7th. It is a beautiful day outside. It's so hot. I have to stay inside. So I'm happy to have the Amplify team here. We have Froggy and I've who's behind who's
Uh,
Amplify?
yeah,
What?
you can call me the Amplifier or Chief Elk is my Twitter account, either or.
Awesome. I love it. So we have these two gentlemen here. They are in charge of the project. We're going to dig in. We're going to ask questions. We're going to find out exactly what's going on with Amplify, what you can expect if you want to get into this project, and just everything about it. We're gonna get through it, guys. So I'm really happy to have you. If you guys have some great questions, show support, leave some comments, leave some likes. We'll love that. Thank you so much. So let's get into it, guys. Who are you? What's your background? Let's start there, and then we'll get into why you guys decided to build Amplify.
Sure. Yeah. Thank you again for having us. I go by Froggy on here, but my name's Chris. My background is in law. I ended up transitioning from the legal field over to crypto full time, pretty much with the intent of getting into project development and project management. Been doing that for a couple of years now, and Amplify is essentially the culmination of a variety of other projects with all of their flaws accounted for. And the primary one is essentially providing a value add mechanism into the native token such that it actually has a form of intrinsic value. So that's a nutshell of myself and the rationale behind Amplify. And Chief, if you want to go ahead.
Yeah, so my name's Jordan or Chief Elk on Twitter, and yeah, so I've been in crypto for quite some time. My professional background is I work in management consulting, particularly around large like mainframe systems, taking those like kind of doing like for like conversions, modernizing them in the cloud. Um, so I have like a bit of a tech background, and I've just been kind of in DeFi for several years, or like even before DeFi, Bitcoin for quite some time.
All right,
Um,
so you guys been in the space. You guys have some good knowledge around the space. What brought you guys together to create Amplify?
so like I'll take a shot, and then Froggy, if you want to chime in, feel free. But we've both been kind of around for a while, right? So we've seen a lot of attempts at protocols that promise passive income,
Yep.
right? And a lot of them had some success, and they were innovative and at that specific point in time. But they also had what we considered kind of crucial pitfalls from a tokenomics standpoint and kind of a game theory standpoint that in the end it would kind of lead to a bad result. And that's really kind of what brought us to creating Amplify, or the motivation behind it. If you want to add to that a little bit, Froggy.
Sure. Yeah, sure. Just constantly ignoring phone calls coming in on Telegram and Discord every few seconds. I guess a few people want to get into it. It never ends, but
It never ends.
yeah, right. So yeah, pretty much to add on to what Jordan said. We were both pretty involved in strong block and some of these other earlier node projects. Or projects that claim to be node projects, as well as a few of the early rebase tokens. Yeah, right. As few as some of the rebase tokens, Ohm and Time, and some of the other forks of that. Got rugged on a few of the other node projects. I won't name them, but as everyone who's been in DeFi for at least a year or two knows, the mission that these teams purported to pursue with respect to passive income was either designed to be a sham or at some point ended up becoming one. Right? They were all these sort of pyramid scheme houses of cards, right? And so they'd ultimately grow to a certain size, a certain extent, and then the house of cards would come crashing down once they realized that they were entering essentially a height of, or rather, a state of hyperinflation, and that the token really had no value whatsoever, other than to accrue more tokens and then dump them on the next person's head. And so we had. Right. So we had some varying experiences with these projects, and throughout them, especially afterwards, Chief and I would, we'd either get together in person or we'd be speaking on the phone about how these projects could have done the right thing. There had been so many opportunities even opportunities that were presented not necessarily by DeFi experts, so to speak, but by community members who, whether they had large followings or not, some people in the communities are extremely intelligent, and they've come up with great ways to make these projects more sustainable. And yet, time and time and time again, no pun intended, time again, these teams ignored it, and they never really added in any of these mechanisms, if you will, that could have prolonged their life expectancy and added value where there really was none. And so it became kind of apparent to us that after a while, these were either cash grabs or they were deceptive, in some way. And so we put our heads together and said, what if we could come up with a project that can actually have an intrinsic value that could theoretically go on for eternity. And there's an asterisk next to that, such that, if, for example, if we had renounced the contract on day one, there'd be absolutely no possibility for us to make any changes or any adjustments on the contract going forward, whether that's with decay mechanisms or yield adjustments or what have you. And we realized right out of the gate that for something like this, there will have to be fine tuning over time, right? And whether that means you have to, boost yield in one area for, X number of months and then reduce it in another area, and perhaps, make this change with respect to rewards pools or restructuring certain contracts and things like that. But we looked at all of the shortcomings and the downfalls, and we said we can make something really, really engaging out of this. And to us, the mining scene has been around for years. In our view, it's quite oversaturated by this point.
Yep.
And we knew that this Ethereum merge was coming up. And we said, you know what? There is a way that we can essentially leverage this merge for the benefit of a community, right? And that you truly can monetize a protocol such that you're giving it an external source of revenue to create intrinsic value. And then, so beyond that, we looked at this potential issue of inflating the LP or hyperinflationary supply. And we said, okay, we're going to add a variety of built-in mechanisms that temper, manage, control, and adjust that. And it's going to be through a combination of these, in addition to features that we add over time that are actually going to control this and pretty much make it such that, it never really becomes a problem. And so, we're constantly strategizing, even though the protocols have already been released. We're at the very early, we're literally at the outset. It's been 1 month as of yesterday that it's been around, and we're constantly, every day strategizing on the next steps that we're going to take in terms of implementations, because there really is so much that can be done with a project like this. And our primary focus as a team, the 8 or I guess 9 of us, including the developers and web designers, we do not rush to push anything out without strongly considering the pros, the cons, the game theory considerations, the potential drawbacks, so on and so forth. So for us, this is almost a mathematical modeling exercise more than just a simple token. But it's been a lot of fun so far, and we know that the growth potential is essentially unrestricted. And essentially, really at this point, we've been able to continue growing without the addition of venture capital. We intend that we don't think we're going to need that if we end up but if we decide we wanted to bootstrap several million in liquidity to bulk purchase X number of validators, perhaps that could be considered. But in our view, crowdsourcing liquidity and capital for something like this, really it retains that fundamental democratization element that we're going for, right? And so our ultimate goal is not only to eventually become the largest validator on the Ethereum network, but to ultimately go cross-chain and multi-chain and establish validators on other chains as well. And if we're able to do that through 100% crowdsourcing and keeping it as decentralized as possible and kind of moving ahead on that path towards decentralization over time with each further implementation, then I think we're on the right track.
So let's talk a little bit about that, right? You guys, when people come in, they need 20 amplifier tokens to create an amp, right? An amplifier pays out rewards, and then people can also, stake. They can earn ETH. Walk us through how people can participate and how people can make passive income their different ways with your protocol.
Yeah, so there's like we wanted to be inclusive of everyone in making the protocol. So there's if someone wants to partake in, we'll just take them through the whole buying cycle, I guess, right?
Yeah.
Someone wants to buy purchase an amplifier, they would need to buy 20 tokens. They could acquire them through the going on Uniswap. And what's happening when you're creating an amplifier is you're actually buying tokens out of the liquidity pool and burning them, which entitles you to an emission rate that logarithmically decays based on certain functions. So you're creating a net positive to the protocol, right? When you're buying an amplifier, and therefore you're being rewarded in the emissions, right? If you want to take that a step further, you can fuse your amplifier, which does one of two things. And there's a page on the dApp for you to fuse. The dApp is perpetualyield.io. But when you fuse your amplifier, you'll be given a suggestion or options of 1, 3, or 5 years. And when you select 1, 3, or 5 years, obviously the 5 years taking a longer bet on the protocol, so they're going to get more of the ETH rewards proportional to their share. And also the perks with the 1, 3, and 5 is you get to mint some our governance token called GAMP. And every time for the 1 year, there's you basically get the longer you fuse, the more of the governance token you accrue, and the governance token accrues yield through revenue sharing. So the governance token is kind of it's a pretty unique yield bearing token.
Thank you for explaining that. Yeah, because I know there's several different things going on here. So you can stake, earn yield, you can create amplifiers, maximum 100 a wallet, correct?
92 or 94.
Yeah, it's 96 per wallet, and yeah, it's
96.
Nice. Yeah, it's been changed around a few times. Right now it's a maximum of 96. But essentially the reason that we wanted to create both an unfused or traditional amplifier is to appeal to the target audience that is used to the structure, if you will, with a project like Strongblock, that understand that this is on steroids with essentially, we believe, all of their flaws accounted for. And I think particularly with the unfused amplifier, the decaying elements are going to be the strongest things there that provide longevity, if you will. So there's two forms of decay, both logarithmic and linear.
Talk to us a little bit more about the decay model, because that's important to people, especially if they're going to be investing. What does that look like?
Yeah, sure. So there's a flat 72-day, I want to say 9% linear decay rate on any amplifier claims. So essentially, if you claim any time within 72 days of creating that amplifier, you're going to be essentially incurring some sort of early withdrawal penalty, if you will.
Tax.
A tax, basically. However, that you're not taxed in ETH. It's just taken in the native token. So there's not actually any net effect on the chart. It's just that the amount that you're going to be receiving will be X percentage lower. And so that percentage decreases day over day linearly over that 72-day period. So by the time you get to, let's say, day 72 and 4 hours, you do not have any time decay penalty whatsoever. However, the additional and what we might say more robust claim decay feature is what we call claim frequency decay, which uses a term that we've coined called native logarithmic de-risking. Kind of a mouthful, but essentially what it does is right now it's set such that every single time you claim rewards on an amplifier, it's going to decrease the output of your rewards by 15% each time. It's important to understand, however, that because it's logarithmic, it never goes to zero. So there's no cap, there's no maximum, and you could theoretically continue. Let's say 15 years from now, the project's still going. If you only claim, once every 6 months, or once every 3 months, or once every year, it's going to take you quite a long time for that to decay. And the intent with that is to sort of keep individuals responsible to themselves and to the protocol's health at large. Yeah. So if you're an individual who you create an amplifier and you're sitting there and you're thinking, you know what, I'm going to claim as many times as I can, and every single time I create a new token, I'm going to sell it into the pool. You're certainly eligible and qualified and capable of doing that. But in our view, that person who's doing that more frequently represents a greater risk or a greater liability. So we essentially de-risk that individual by systematically reducing that amplifier's output per claim 15% each time they do it, such that it de-risks the remainder of the holders from that individual. And so if you could really liken it to renting out your car. You have a brand new car, you decide you're going to rent it out using one of these apps. You're initially able to get a great premium on it because it's new and shiny and it operates perfectly. But after you've driven it, or I should say after your renters have driven it, maybe 100 or 200,000 miles, now it's dinged up, it's dented, it's not operating quite right. Now you're not going to earn as much money on it. And so this uses the exact same type of thing. Eventually you decide to yourself, okay, you know what? I'm either going to exit the car rental business or I'm going to invest in a new car. And so a similar concept applies here. So that's how I would describe amplifier decay. The caveat with fused amplifiers is that you cannot actually withdraw your claims or your claimed rewards until the end of the fuse. So those are locking cycles, essentially 1 through 5 years. And those individuals who choose to do that in exchange for taking on that risk of having to actually lock tokens receive Ethereum rewards each month through 3 separate streams. One of them is through the GAMP, as Jordan had mentioned. The other is through what will be validators actually operating on the chain. And then the third one is through a process that we call yield amplification. Yield amplification is essentially taking a percentage of protocol fees and pretty much boosting the yield that a validator would produce. So validators on the Ethereum network are relatively conservative with what they produce annually. And so we said, you know what, we'll find a way to boost that. And so we don't want to, give any guarantees or any, but we can kind of comfortably project that it looks like at present that through yield amplification, we'll probably be able to 2x or 3x traditional annualized ETH revenue through that. But again, no guarantees. So I'll throw an asterisk onto that one.
It's crypto. Nothing, nothing here is financial advice. We're just talking information purposes about the project, right? So it's all good. Let's talk a little bit more about the revenue streams, right? You said validator, yield amplification, and what was the third one?
Jordan, if you want to touch on GAMP one more time.
GAMP, that's right. Yeah, I'd like to talk because GAMP, people that own GAMP are going to be able to, aren't they going to be able to, help change the chain, suggest things, vote on things? Walk us through kind of what that looks like, holding the governance token.
Yeah. So right now, basically holding the governance token, you will eventually be able to vote on proposals and so forth and so on and so forth. But at this point right now, it just gives you the benefit right now is you can mint it every 30 days once you pay your fuse. And that allows you to claim a portion of the 30-day trading volume.
Okay. Well, then when you say pay your fuse, so people are going to be hit with a monthly fee. What does that look like?
So there's it's like 0.008. Like it's quite cheap, but there's a monthly payment to maintain the fuse amplifier or a regular amplifier, and you can pay that, and that goes to crowdsourcing validators, and you can pay that up front. I believe 6 months or monthly, whatever's more convenient for you.
And just to touch on the governance aspect of it, so at present we're in the midst of creating and I guess drafting an almost internal governance structure. And so, yeah, the ultimate goal is to eventually hand the project pretty much off to the community, right? And however, doing so responsibly and doing so over time. At present, any individual who holds GAMP, and again, to hold GAMP, you need to have a fused amplifier, but you can have a fractional GAMP token, right? So if it's 0.00001, you still have a say. You still have voting abilities. So anyone right now can actually go onto our snapshot, and it's called snapshot.org as the governance site. You can access it directly through our DApp. Anyone can go on there and submit any proposal. However, at present, while we're drafting up these internal governance formalities, if you will, it's a structure that is going to pretty much outline the correct, if you will, voting process and procedure. And, it's going to dictate the things that will need to take place prior to any actual implementation. So let's say some individual has the bright idea that they want to increase APY to 100,000%.
Yeah.
And, maybe there's only 100 GAMP holders, and those are perhaps malicious actors who just have a lot of money and want to destroy the protocol, right? Because gamifying and, potentially undermining or destroying the project has been, at the forefront of our minds in the sense that we need to safeguard against that. So if these GAMP holders all at once say, aha, yes, you know what, let's crank up APY to something that is certainly going to kill the project. We're going to have a set of kind of not only guidelines, but stricter than that. They are going to be a set of rules that must be followed upon the creation and the submission of a proposal. And in any of those submissions, the team is going to be drafting up a document, essentially giving the team's input on it, right? And however, things will eventually scale to such a point that the community members will eventually have more governance tokens than the team. And so the team's voice will inevitably be outweighed, and that's completely fine. And we've designed it with that intent. I should note that the team's governance tokens are not revenue sharing. We're excluded from revenue, right? So we have 60 pre-minted GAMP tokens, and those are specifically to, I guess, act as the voice of both the dev team and the ops team. And so, again, one day it will come a time when we're grossly or massively outweighed by the community, and we're fully prepared for that. We just want to ensure that any decision that, the community ends up taking the helm on, that they have a full and complete understanding of both the potential pros and the potential cons of implementing anything like that.
Fair enough. I mean, you need to build it out. You need time, right? You want to make sure that nothing crazy gets done, while you guys are building this out. And eventually you want to hand the keys off once everything is, stable and grown. Let's talk a little bit about, in the white paper, you guys talk a little bit about the annuity market, how to capture some of that. How do we bring traditional investors, right? People that are in stocks and bonds, stuff like that. How do we bring them and gap them over to something like this, right? Because I do think this would, be more receptive to somebody, that's looking for maybe a longer term investment, that it's kind of in this sort of space. Are you guys trying to bridge that gap? Are you guys, working on that? Walk us through what your mindset is like to try to bridge that gap.
Sure. Yeah. So one of our, we essentially right now we have 3 target audiences. The first one, and probably the most pressing at this moment, is existing Ethereum miners who are going to be possibly losing. Well, not possibly. They are going to be losing out on that stream of revenue. So we are targeting them first. The next target is going to be the sort of passive income crowd, if you will, that is already involved in DeFi, but they've been burned too many times to count, unfortunately, over the last couple of years. And so we know that segment of the potential community is going to need quite a bit of time to allow us to demonstrate that we can help rebuild that trust. The third target audience is exactly who you're talking about. Individuals who have some, cash set aside. They're perhaps, they have money in equities or traditional bank accounts, or maybe they're still involved in CDs or something like that. And yet they've never owned any crypto. One of the ways that we've created it extraordinarily easy, in our view, for them to get on board is by having a fiat on-ramp directly built into the DApp, which allows them to purchase tokens with a credit card or a debit card. However, we've also been working on a series of video scripts, which we will be publishing on YouTube. And there will be a segment or a series of videos that are what you might consider very technical, very mathematical, that are targeted to the DeFi natives. But actually the broadest or the widest goal that we have really is to explain things in such a way that a person who's never had any involvement in crypto or digital assets whatsoever can actually feel comfortable enough to get started. So, for example, we're not just going to start talking about, proof of stake this and, secure hashing algorithm, nothing like that, right? These videos are going to be very clearly and very easily explaining things in a way that really anyone can understand. It'll essentially be a how-to guide. So there's going to be not only a how to acquire, how to buy Amplifi, but there's going to be very high-level overviews on what Amplifi is, right, and even what Ethereum is, and what this upcoming merge from mining to validators is actually going to have as an implication. One of the very large projects that we look to sometimes, and in a way that we kind of modeled a certain portion with respect to the locking mechanisms, is Hex. And some people love Hex, some people hate Hex, but at the end of the day, they're still around. And so, we think that we saw it as a good decision to take, a few of their features and sprinkle them in. And one of the things that Hex did early on that worked out Hex did early on that worked out quite well for them was to actually get involved in doing regular traditional marketing campaigns through even snail mail. And so we're not necessarily committing to doing snail mail, but we are certainly exploring more traditional marketing avenues, yeah. Right? And so where other projects might want to be in as many crypto related articles or publications or really any type of advertising or marketing publications, we actually prefer to get some exposure in more traditional financial outlets and media outfits. So just for example, the other day we had an article that was published in MarketWatch. And as you know, MarketWatch is not limited to cryptocurrencies. And an individual ended up reaching out to us via email saying, hey, I read your publication and I am currently an Ethereum miner and I don't know what to do next. Can you help me? And so that showed us that, hey, we're reaching out to the correct audiences, and we are actually, getting engagement from these same audiences. We've had also a pretty good number of individuals who are already involved in Hex come on board. And we know that we're probably going to be able to reach a pretty large swath of, what you might call normies with our, basic step-by-step video guides and things like that.
No, I mean, neatly said it, right here. Genius. I mean, that's what really projects have to do, right? We have to figure out how to bridge the gap in between that traditional world and the crypto world to really educate and bring them over. Will people be able to, set up an amplifier using a debit card, or do they need to, have a MetaMask? Are you guys going to try to, build a system where people don't need to have a MetaMask wallet and all these other things, these technical know-hows, or is it probably that's maybe too far out, or maybe we haven't even talked about that yet?
That's actually a great question. We wouldn't be opposed necessarily to creating a wallet. However, I think at this venture, at this early stage, it's probably something to move down a little bit in the roadmap. Because you're right, doing something that's perhaps a little bit more specialized and directly built into the DApp itself, if that could be done technically, would be phenomenal. I think, however, given the number of other potential implementations on our agenda right now, it probably would have to be relegated, to the future at some point. Right now, I think the benefit of a wallet like MetaMask is that it is pretty readily accessible. Excuse me. So long as you're able to follow the guidelines, right? And so most projects end up just saying something along the lines of download MetaMask and send ETH.
Yeah.
We've seen that on countless meme
Everywhere.
coins. Yeah, it's everywhere. And unfortunately, that wouldn't work here. If we're going to be attracting these types of individuals, we have to almost place ourselves in the shoes of someone who has never had any experience like this before. I'm sure you remember your very first day in crypto, and you start hearing terms about your digital wallet or something, and your seed phrase or your public key, and you're thinking, what am I doing? So everything will be detailed in not only the videos, but on our documents, which our documents, if you've had a chance to look at them, are, they're our proverbial white paper, so to speak. It's quite comprehensive as is, but we are always adding to it to help clarify things to people. I think people will have a pretty good understanding of how to operate MetaMask once we show them how, even if there is a slight learning curve for now.
And I shared the docs earlier in the chat. I'm going to share them again, so it's right there. If you want to get more information, the best place obviously is Twitter, Discord, things like that. But if you want to read up on the project, you want to go ahead and use that docs, perpetualyield.io. And start going through it. I went through it again this morning just to brush up on my knowledge before this chat. And you guys are very, very technical in there. I mean, I read through a lot of white papers and Git books, and you guys go into very, very good detail and explain everything. There's no spelling errors too, which you love, right? You always see these projects with spelling errors. So you guys did a great job. Sounds like you guys have a great marketing strategy, kind of laid out what you guys want to do and what you guys want to accomplish. So that's great. I did see that you guys went from version 1 to version 2 contract. Can you explain why you guys needed to merge to V2 or what happened there? Was that the plan all along? Did you guys change something?
Yeah, so I can take that one.
Okay.
And yeah, so with the V1 contract, there was a problem with the first fuse pool. There was a 16-year fuse pool for someone who was really long on the project, right? And the time locking didn't work in the contract. So someone was able to withdraw 16 years worth of rewards on day one. So we really didn't get to see the protocol function as we had hoped.
Yeah.
So instead, we kind of took that. We went with the V2 and said we're going to scrap that 16-year in general, and we're going to do some more things on the contract side to just like ideas we had thought of implementing on the V1, but just did not have time. We were like, we're going to take our time with this for the V2 and really come out with a better product. The DApp is more complete, and so on and so forth. I don't know if you want to add to that at all, Froggy.
Yeah, sure. You pretty much hit the nail on the head. Yeah, there was essentially just an issue with the locking mechanism, that it wasn't working properly. One individual took advantage of that, ended up selling off several tens of thousands of dollars. The exploit was patched, but nevertheless, something like that, it truly erodes trust, and our biggest goal throughout this entire process has been transparency, and proving trustworthiness. And so that was not something that we were going to allow to continue, with us just saying, oh, well, we patched it, let's move forward. So we took the opportunity to pretty much, as Jordan had just said, to take some of these other ideas that we came up with in the meantime after V1 had launched, and said, you know what, we actually want to appeal to a completely different audience, and we have a bunch of other great ideas that we can now actually implement. And so we took probably, I want to say, about 6 weeks to go to the drawing board and have that developed now by a team of developers and web designers. So we're pretty happy with the outcome. Now, it looks like we have a question down at the Bottom
I
of
was
the screen.
I was
Yeah.
gonna get that.
I'm happy to do that. Or,
Oh, real quick. Good thing you guys didn't, renounce the contracts on V1 because that would have been all bad, right?
Oh
So,
yeah.
oh,
all
Go
right.
ahead.
Go ahead now. Yeah, let's get Justin's question answered here. Justin's question is: if somebody's driving and we don't want you to watch the screen, can they explain the yield amplification aspect? Do not understand how ETH-based APY is 20%. That's the question.
so that's more to take account for percentage allocation of the pool. If you're talking about the fuse pool, getting how the yield amplification fund is spread amongst fused holders. If I'm understanding the question correctly.
Justin, does that help? If it doesn't, go ahead and rewrite the question. We want to get it answered for you, and we'll get it answered for you here today. And if anyone else has any questions, please go ahead and type them in. I'd love to take questions from the audience and throw them up for the team. I appreciate you explaining, why you went to V2. How's V2 running? Have you guys, I got to ask a question. Have you guys had any issues with V2? Has there been any problems, anything you guys had to address once V2 was implemented?
There wasn't any necessarily, there was no problems at all on the contract front. I think just kind of on the operations front, and I take accountability for this, is like
Strong.
we did because our goal with V1, right, was to accrue validators just as within V2. We wanted to, and there was a large gap between V1 and V2. So we wanted to just be above board with everyone. So we put all of the ETH that we accrued into the liquidity pool. So the starting price, we started people up a little bit, kind of as a being gracious for, hey, thank you for entrusting us and being patient and hanging out. And that was a mistake on our front. It got sold down. It got dumped on. They're like, oh, it was probably like, oh, these guys made me wait a month, sell, right? But like it gone. Like I don't want to discuss like the chart, but right, it's recovered from that point. I'll put it that way. But that was only the only, I guess, like real concern on our front was it was just like it would be a shame to not let people actually see the tokenomics kind of go to work when it was like, because at that point it would have been a judgment error on our part, right? So I think once we got past that part, it's really been on the contract front smooth sailing. Yeah, I don't know if you wanted to add anything to that, Froggy, but that's kind of
sure. No, yeah. Again, I think you pretty much addressed it. Again, going back to the transparency thing. So we knew that we had raised about $150,000, I think, which we ended up moving on V1, which was paired with Tether over to USDC, as we saw USDC's popularity kind of shoot up over the last few months. And we wanted, again, following this sort of exploit, if you will, or I guess a loophole that V1 had, we wanted to be as painfully transparent with the community as possible. And we never wanted to give them this, like premise or assumption that we were going to be taking some of the liquidity for ourselves. And so the obvious thing to do from our point of view was to say, okay, you know what, we're going to take 100% of the funding that we have here, and we're going to move it right into the liquidity pool. And now on the plus side, right, on the plus side, we had very thick, excellent starting liquidity. On the not so plus side, now you had some holders that had bought in at $2 essentially that are now starting out at $13. And, in a bear market, they're looking at that and they're saying, ooh, okay, we're going to eat today, So that it definitely affected the price and the momentum for probably 3 to 4 days. And then those people exited, and it really did ultimately perform exactly as we expected with respect to, not how we expected, but rather as how we intended. Pre-sailers it was a public pre-sale, by the way, anyone could join. Yeah. And we bootstrapped liquidity, and that was the goal. And originally the taxes were 9.9. We reduced them to 3.3. And hopefully in time we're eventually going to be able to, following implementations. I mean, this is, many years down the road, 3 to 4 years perhaps. But the ultimate goal is to eventually remove taxes and be pretty much funding dividends or distributions to holders through back-end platform fees that are accrued through the same type of ways that your typical blue chip or top 100 platforms accrue fees. So no type of pyramid scheme tokenomics, no Ponzi tokenomics or anything like that. Just your traditional DeFi elements accruing value as they normally would.
Yeah, it seems like you guys have built a really, really solid base for a project. You guys have obviously a great community here, people that believe in the project. We do have JDog 949er. I don't know if he's a 49er fan or whatever, but shouts out to you, JDog, for the question. Can you explain the deflation aspects and what you expect deflation to look like over the next 1 to 2 years?
Yeah, sure. Happy to take that. So essentially, the way that it works at present is that when you create an amplifier, 20 tokens are completely not only burned, they're actually truly destroyed, or they're completely removed from supply. So there's a direct impact on the market cap and the true circulating supply and the true total supply, actually, as to where when you're just burning the token, you're really just sending it to a dead wallet, and it has no visible effect. So on Etherscan, you can actually see the effect of deflation in real time. In terms of what we expect it to look like over the next 1 to 2 years, the way that the protocol works right now is that there's essentially a burn and refill function, if you will. So we know that, and this is very clearly outlined on the documentation. Imagine a roller coaster where you have, you start at the bottom, you go way, way high, and then you go down again, and it becomes this kind of up and down, up and down, up and down. That's essentially the intent as designed with the protocol. So when the reward, the deflation becomes accelerated to such a point where, the number of circulating tokens are quite low. And then X number of perhaps years goes by where now the rewards pool begins to thin out. At present, we intend to keep the rewards pool. In the future, it could perhaps change to a hex style, sort of like T-share type of minting thing. But at present, the intent and what we've kind of gamed it out and done in terms of modeling is to retain this rewards pool style structure. Is that as the rewards pool begins to drain out and thin out over time, when it hits certain intervals, there will be a slight, we're talking like 0.25% or 0.5% increase on what we call the variable cell tax. And so the rewards pool begins to drain thinner and thinner and thinner. And then it gets to a certain point. I believe off the top of my head, our threshold is 5%. And after that point, we then begin to slowly, in intervals of 10%, refill that rewards pool up to about 50%, not to exceed 78%. I know that's very specific, but the math behind it is justified, and it's quite comprehensively explained on the documentation. The intent there is to never really exceed the supply that we started with, which is 121,373. Now, in the event the project becomes absolutely ginormous, enters the, let's say, yeah, we'd like that, enters the top 100 or something like that. There are certainly a variety of mechanisms at the protocol's disposal, which include, really infinite things, but one of which could be expanding the rewards pool in smaller intervals or in larger intervals. The primary consideration there is that the team will never, in all caps, never, ever increase the supply without an overwhelming consensus in terms of governance that has a quorum and a forum and a platform for discussion. At this point in time, there's absolutely no intent to adjust that supply other than your ordinary burn and refill, mint function, which is, it's kind of half of a mint function because the tokens are introduced and then they're burned and then they're introduced and burned. So again, it really is a roller coaster designed to actually reflect in time a soft peg to ETH, such that a fused amplifier could be resembled or could mirror a soft peg to ETH. And the intent is that over time, that roller coaster effect becomes smaller and smaller and smaller and smaller. So you start out on, let's say, like the king to ka of roller coasters, and then you end up in, several years with almost a baby roller coaster. So now the intervals that you're actually minting and burning are much narrower, and they have really no effect on anything, such that it's almost invisible in a way to the holders, and they're not really affected by it at all.
You know what? When you adjust something just a small bit, I like to use the word smidge. It's just a smidge off. Something like that. Anyways,
yeah.
I didn't want to interrupt you when you were talking, so I wanted to say it. Ryan Allison is a long-term holder. It seems like he's been here. He says some of the V1 early investors are still here. When you find a long-term play, don't fumble the bag. Great advice from Ryan. Thank you, Ryan. We did have a question from the audience here. Let's put it up. Chen's Trades asked, what is the current API for liquidity mining?
So the way the liquidity mining is structured is there's like a total of tokens of 5.6 tokens being emitted to that pool per day, which is, like, if you think about it, like half, or it's like a quarter of an amplifier of one. So there's the APY on that right now is not currently calculatable, because there's not a lot of people actually partaking in the liquidity mining program at the moment. So you'll actually probably still get close to or north of 100%. But if that pool were to fill up, then your percentage relative to would go down, unless you decided to add more liquidity.
Yeah. So just maybe to explain it a little bit differently, for people who may learn differently. As Jordan had said, yep, 5% are emitted per day, and that's that same. I'm sorry, not 5%, but 5.56 tokens, I think, are emitted each day, and that number would be constant whether there's one liquidity provider or 1,000. And so that has a direct effect or a direct impact on the APY. So the more liquidity that's added over time, the lower the APY would be, and the fewer holders that are actually providing liquidity at that time, the higher it would be. That is adjustable on our part, but we weren't certain at the outset. We had a much better idea who was going to be contributing or joining or participating in the staking pool. We pretty much hit that number right, with our nail on the head or so, hovering between 28 and 40% or so, depending on how many holders are in it at the moment. But with liquidity mining, because we already had, as Chief, has noted internally quite a few times, is that we already have a really great liquidity pool, and so some people might say, okay, you know what, this is a relatively low market cap project. We may not even really need to add too much liquidity. However, so again, that can be adjusted up or down over time. Obviously, the larger the protocol grows over time, that APY will inevitably come down. But for the individuals who are open to taking that risk of hopping into a lower cap project like this, that's fresh out of the gate, then we're going to reward them for doing that.
Fantastic. I want to give the community a little bit of time here. I do have a hard stop at 4. I got to teach a class, crypto chat today in my community at 4 o'clock. I don't want to be late for them. Is there anything in the project that we have not gone over that you feel is important, that the audience and people watching, later on today or tomorrow, whatever it is, they need to know about the project? Have we not addressed anything? Is there anything on your mind, that, could add more value to, people listening at home?
Sure. Yeah. I think and we've been strategizing, if you will, internally, how to present this aspect to the community, to make sure that they have a pretty good understanding of the end goal. So certainly the project, first and foremost, and truly what's going to be underpinning the value of the token and of what we are going to be considering an ecosystem, is going to be the fact that there are these validators that are creating an intrinsically valuable token. However, the second aspect of that is that we have an intention and a roadmap that's going to be released within the next 2 weeks, that has I believe it goes out to Q1 2026, that has certain DeFi implementations and adjustments and upgrades to the protocol that you know, provided there's, you know, continuing interest in the project and continuing volume, so on and so forth, that we'll be deploying. And that the ultimate intent here is to create a full-fledged DeFi ecosystem. And the purpose of that is because, you know, it's not only, this is not only a project that we'd like to appeal to the quote unquote passive income crowd, whether again you're a normie or a miner, or you're just into passive income crypto projects. We'd like this to become essentially as utilized as any other large scale blue chip project. And so, without saying too much, it's going to, the intent is really to create a full-fledged ecosystem where you can pretty much do, yeah, it's tough to walk the fine line of revealing too much, but you'll have a lot of flexibility in terms of what you're able to do with the project. So if you look at some of the largest and most successful DeFi projects out there, the intent here is to slowly but surely introduce some of these features, and with kind of this understanding that the end goal of that is not only to provide bootstrapping, or is not only to bootstrap even more liquidity to the protocol to acquire more validators, but is also to distribute a percentage of fees to the holders of the token, right? And so there's kind of these competing yet complementary interests where you want to have the treasury become as liquid as possible to pursue the ultimate goals of our goal is to, for example, acquire 100,000 validators. But however, you also want to continue to reward your long-term loyal holders, right? And so we intend to do that with distributions over time. And then the other one is, there's a few more, but these are kind of these sort of considerations, right? It's you have to be able to strategically determine how you're going to benefit every type of user on your platform without disadvantaging. Is that even a word? Not at
it is now. It is now.
Without negatively affecting any other type of holder, right? So we wouldn't want to introduce a feature, for example, that's going to benefit stakers at the detriment of liquidity miners. But the third focus that I was going to mention was the third ultimate goal is to continue with this value backing of the native token, right? So, in some projects, we've seen a lot of times that they kind of do this sort of loose correlation where, oh, if the treasury has $1 billion in it, therefore the token is backed. And that's not actually true or accurate at all, right? If there's no actual means to return that value to the holders, then you're just a large treasury who could run away with it at any time, right? As we've seen over and over. So it's part of our kind of core mission here to benefit all three of these, not only the native token holders, but the long-term holders, and while providing distributions to them as well, and backing the token.
Fantastic. J-Dog had another question. I wanted to get this out. He said, what are some of the projections in terms of ETH rewards for fusers for trading volume and number of ETH validators? That makes sense.
Jordan, if you want to take this one.
Yeah. So I think the retire rewards pool for the fusers for the GAMP mint last time was over 7 something ETH. I know the biggest claimer, I believe someone who had 20 fused amplifiers got 0.85 ETH. And that annualized would be over a couple ETH. But it's tough to actually map out APY because volume is massive. So we could just annualize it off of 1 month, right, in a theoretical projection.
Yeah. But
it would disservice if the project picked up volume to accurately replicate it, or it would also, on the converse, if volume dried up or whatever, it would also not be an accurate representation. So right now, the APY on fused holders is north of currently north of 30% on ETH. But it's tough to say like long term, like because I can't say like if the volume if there's 500K volume daily, right, that pool becomes a lot bigger, and then the price of fuses goes up. So like it's tough to actually project that.
Yeah, that's fair enough, man. I mean, it's really difficult when you're looking a year out, 2 years out. Anything can change, right? That human factor can change depending how much volume's coming in, amplifiers built. How many amplifiers have been set up since launch? Do we have that number, that figure? And is that raising raising weekly? Like how's the growth coming along the last month?
It's definitely growing. It's over 1,100 now. I think like 1,150.
Okay.
And what was interesting to us was that 700 of those are fused. So there's like I think 59.6 last I checked, or 59.7% of amplifiers are fused. So that means a lot of people are partaking in the upside of the ETH rewards after seeing the first.
Yeah.
Ramp. We noticed there was like the last few days, if you're in the Telegram, you'll see like a lot of fuses were created, and I think that had a lot to do with the first month volume and the GAMP claim for governance holders.
Yeah, one of the considerations that we had here early on is that we wanted to be able to create a variety or almost like a suite of products over time that appealed to a wide audience, right? And so some individuals do not like the idea of locking up tokens for X number of days or years, and that's completely understandable. And so that's why we created the unfused amplifier, and so those individuals are able to really pretty much claim at any time. And so we actually didn't anticipate that so many people are going to be interested in fusing. We think it's great. We love it. But the overall intent here is to provide as many products, I guess, so long as they, again, provide a benefit to the holders and to the token, and help pursue the mission of the project, as possible, because everyone has their own preference. Everyone is, some people are most comfortable staking. Some people are most comfortable doing farming or liquidity mining. Some people would rather just lock the tokens for 3 years and come back and check. And so we wanted to create an expansive ecosystem that does truly cater to each of those types of individuals without, again, being at the detriment of any of the others.
Well said, guys. I think it speaks volumes to what the team and the community believe in the project, that they're locking these up, for a year or 2 years, whatever the time is. That's pretty strong. 700 out of 1250. You guys are over 50% of that being fused. So hats off to you guys. Obviously, your community believes in you. You guys are very well versed in what you're doing, and I'm thoroughly impressed of the overall project and what it looks like right now. So congratulations on that. Is there anything else that you guys would like to say in closing to the community? Any alpha you want to give or anything like that in the last minute?
Yeah, sure. I mean, yeah, the one thing I would say is, like I had said, we are going to be releasing a pretty comprehensive roadmap sometime within the next 2 weeks. We'll be announcing that date probably within the next few days, as we kind of finalize some internal things on our end. And you're going to be able to see that first and foremost in our Telegram group. We try to post as much stuff on Twitter as well. And then anything that we post in Telegram, we also actually, I should say, any huge updates, and we would consider this as a huge update that's coming forward. We actually type out via a PDF and distribute it. And so that PDF will actually be uploaded right onto the website as well. So if you're not in any of those groups, but you're interested in staying tuned and keeping up to date, you'll be able to refer to the docs for that as well after the announcement.
Beautiful. Anything else you guys would like to say other than that? I mean, you guys did a fantastic job. Thoroughly impressed with the project. I think you guys laid it out extremely well. Anything else before we end? Ciao.
Yeah, I just want to say thank you for having us on here. It's
Oh, no worries, guys. We always like to have solid teams and solid projects. You know, that's what we like to talk with our community about and bring forward to the public. So we're happy to have you and spend the time with you guys.
We appreciate that. Yeah, I mean, we intend to be here for, you know, many coming years. We're
16 years. I'm gonna lock mine up, baby.
There we go.
That's right. You know, we're definitely excited for this upcoming Ethereum merge to be happening. You know, and you know, tag along with us as we begin to accrue more and more validators, and you know, ultimately have some pretty significant influence over the overall network over time, because we're pretty confident that we'll be able to do it. So
yep, and we
you
believe
guys want to rule it all, huh?
Yep, in terms of decentralization, we think the largest validator should be community run, just to keep the ETH network incredibly decentralized. So I think there's a really big mission statement people can get behind too.
Fantastic. And neatly said it all. Nice AMA, guys. Well done. Thank you so much. And thank you for home for listening. We really appreciate you. And it's been another publication for Cryptonaires. Thanks, guys. Cheers.
thanks. Take care.
Take care.